And I think the backdrop for rising US rates and why March is now not just on the table but increasingly likely to see a rate hike by the FOMC is strong growth in the US and strong growth globally. And I think overall that's why EM markets have so far shrugged off this environment of rising rates and a stronger dollar relatively well. I mean, the performance of most EM markets so far this year has actually been very, very resilient.
OK, let's turn the focus to China and the data releases. As you say, PPI is going to be the top line item this week. Are we going to see more evidence that deflation is fading into the rearview mirror? And what are the policy implications?
Well, I think we are. And I think in some ways the Chinese PPI numbers, producer prices, is the most emblematic indicator of the global reflation trade. Remember, last summer PPI was still in serial deflation. I think the data this week are likely to see it hitting 7.5%, maybe even 8% year over year. And I think that speaks to not just reductions in industrial capacity in China, but the fundamental turnaround in China's industrial base, and so stronger demand. I think we're probably close to the peak of this now. I mean, our analysis of base effects suggests it was really about last March that we started to see this takeoff on the industrial side of China. So this is probably as good as it gets in terms of the upward stimulus from PPI. But I think it's still going to be a very positive number for risk appetite if we see a print of 7.5%, maybe even 8% on these numbers this week.